If you're going to be buying a home in 2024, refinancing your mortgage, or your mortgage is up for renewal right now, then listen up because this video is for you. In today's video, we are going to talk about mortgage rate projections for 2024. But before we dive into that, please do me a favor, hit that like and subscribe button so other people can find this video too. My name's Steve Kornbluth. I'm a mortgage agent with SafeBridge Mortgages, and I help good families avoid bad mortgages. And one of the ways we do that is we figure out a strategy to help them plan on where rates are going. And that's exactly what we're going to do in this video. So stay tuned. So in order to figure out where rates are going to go, we need to understand where they currently are right now. So as of today, the Bank of Canada overnight lending rate sits at 5%. And this is the rate that banks use to borrow from one bank to another. So let's not confuse that with the bank's prime lending rate, which is what our mortgage rates are based off of. So right now, the bank's prime lending rates sit at 7.2%. So how much adjustment are we going to see in the Bank of Canada's overnight rate? What the Bank of Canada wants to do to control the economy and help control inflation is they want their overnight lending rate at what's called a neutral rate. So this is a rate that doesn't overstimulate the economy and doesn't restrict it too much. So this is kind of like a Goldilocks rate. If the economy heats up too fast, they will raise rates to slow the economy down. If the economy is stalled, they will reduce rates to spur economic activity. As it stands right now, the estimated neutral rate lies somewhere between 2 and 3%. So that's 2 to 3% on that overnight rate. If we're at 5% right now and the estimated neutral rate is between 2 and 3%, let's pick a point in the middle. Let's say the neutral rate is going to be around 2.5%. So that means we're going to see potentially up to 2.5% of interest rate cuts. How quickly are we going to see those rates unfold? A lot of people are saying it's going to happen over a 2-year span. But if we look at some historical data, and I've got this slide from David Rosenberg's research, we can actually see the time frame, and this is for the Federal Reserve. I don't have the data on the Bank of Canada, but it's gonna mirror it very close. So we can actually see when the rate cuts started and when they ended. And from the data, we can see that a lot of these rate cut cycles weren't over a 2-year span. Some of them were a little bit longer. You know, we saw from June of '89 to September of '92, that was 2.5, close to 3 years. But a lot of them are not even a full year. This kind of leads me to believe that the rate cuts might come at a much faster pace than people are projecting. And a lot of people are going to say, well, wait a minute, we can't cut that aggressively because we can't deviate from the Federal Reserve. But guess what the Federal Reserve said last week? They're already anticipating 3 rate cuts in 2024. I think, based on what the Federal Reserve has already said, based on where our neutral rate's going to be, we've had some economists come out and say we're going to see 3 to potentially 4 rate cuts in 2024. We've seen some more aggressive economists like David Rosenberg, who is suggesting that we might even see 3% in rate cuts. So if you're shopping for a mortgage right now, the best course of action may be to consider a variable rate mortgage, knowing that we're going to start seeing some rate decreases probably in March or April of 2024. And we're probably going to be seeing up to 2%, maybe even up to 3% in rate cuts. Knowing that we're going to see all those rate cuts, and if you are in the market for a mortgage right now, does it make sense to lock into a longer 5-year term? Probably not. Probably best to consider shorter term options or even variable mortgage options once again. To summarize, guys, 2024 is going to bring some rate cuts. If you're purchasing, refinancing, renewing your mortgage, you're going to have some rate relief coming up ahead. We don't exactly know how far or how fast the rates are going to fall, but based on what some of the economists are saying, and based on what the Federal Reserve is already projecting 3 rate cuts in south of the border, I think it's safe to say we're going to have at least 0.75 to 1% rate cuts next year. It's going to move our 5-year fixed rates even lower. So we're going to probably start seeing them on the insured side. If you're buying a house with less than 20% down, we're going to start seeing those in the mid to the high 4s soon. On the uninsured side, if you're either refinancing or buying with a property that's more than $1 million, we're going to see those fixed rates come down too. Be patient. Rates are coming down. And I hope you enjoyed this video. And if you did, please hit that like and subscribe button once again. Get your other Gmail account up. Subscribe twice. Give me 2 likes. And if you have any questions, post them in the comments below and I will be sure to answer them. Thanks for watching.